Greetings, and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MaidSafe. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 28th of July, 2018. Today I'm joined by my co-host Mike, so let's begin. Welcome, Mike. Thanks for joining the show today.
Good to be here again.
Actually, I think I just said it was the 28th of July. That's not Friday, that's Saturday. But it's Saturday here in Tasmania, but it's still Friday over there where you are, so I get confused sometimes. Anyway, I'll fix that in the show notes. So let's just get started with the top cryptocurrencies this week. I don't think there's any big shake-up there. We got Bitcoin, again, still at number one. Ethereum, XRP, it's Ripple, XRP, Bitcoin Cash, EOS, Stellar, Litecoin, Cardano, IOTA, and Tether. Wrap up the top 10. It's been a really great week for crypto, I'd say. Let's have a look at the global charts. I got the week here starting at about 273 billion US dollars and ending at near 297 billion US dollars. So that's a sizable run up.
You got over 300 for a couple of different times during that.
Yep,
during this past week, which is nice to see, getting up above 300. We'll have to see what it does next week. Hopefully it'll go and make another right smart move up. That would be nice.
Yep.
Go and see it make a smooth transition into the vertical, or a sharp transition into the vertical. That would be nice too. But hey, we'll just take the chances and gets what we gets. The BTC dominance is one of the things that I'm, pretty surprised at. It's really been going up lately.
Yeah, 47.3%.
Yeah, if you go and look at it in the past month, it's gone up some significant chunks from down to like 42% up to the 47%. So a lot of people seem to be grabbing chunks of Bitcoin, and based on some of the news stories, it seems like that could be reflected in the dominance.
Could be. I think. I suspect that one of the reasons Bitcoin has gone up so much relative to the others is because of the Winklevoss ETF. However, now that has been basically nixed by the SEC for the second time, which just happened the other day. I didn't make it one of the articles we're going to discuss today, but I'm just bringing it up. It could be that some of that run-up was due to that. People may have been anticipating that the US SEC was going to allow it, and that could have really pumped Bitcoin. And however, they've basically nixed it, and yet Bitcoin is up today. So I'm really not sure how much is related to that, but it's interesting to speculate on, I guess. I don't know. I'm not a fan of currency-only coins, so Bitcoin Cash, all those currency-only coins just aren't. They don't float my boat, but I guess for those who are in them, you're doing all right. All right, let's look at the global charts. Our next thing is Blocktivity. See, BitShares strongly in number one still. Steam in number two. ETH number three. EOS number four. Bitcoin number 5, Ethereum Classic 6, KMD, I don't know, that's a new one here. Oh, that's Komodo, right. Okay, sounds like they've launched their chain. I don't have to look into them. They did a fairly sizable ICO back in the day. Billos 8 and Litecoin 9, Dogecoin 10, Bitcoin Cash all the way down at 11, Dash at number 12. Yeah, a little bit of movement there. What's interesting, this week, I think I checked last night, and Ethereum had 40,000 or so unconfirmed trend, maybe 48,000. And today it's 52,000. It seems to really over the past month, its average seems to have gone up quite a bit. That's unconfirmed transactions, people. That's that's not good for Ethereum. That's bad. That's pushing up the price of gas, and ultimately, gas is what's used in the Ethereum network to do trades within the network. So, yeah, it's not good for Ethereum. And longer term, if they don't get their sharding underway or some method for dealing with the overload that they're having, then I mean, it's probably good for things like EOS, isn't it? I mean, that's probably going to ultimately attract more people into the EOS ecosystem if they can't efficiently and effectively transact through the Ethereum network. All right, our next topic of the week is the maidsafe update. So here are the highlights they have this week. Number one, following the release of safenetwork.tech, that's their new website that they posted last week, we have been working through updates and suggestions posted by the community. This is an ongoing process, so please continue to add any comments or issues into the GitHub repository. Number two, a new version of the Safe App Node.js package will be released shortly in the next few days, which incorporates all changes we've been working on during the last few months. We will also be updating our Electron app tutorial on the DevHub website so it can be used with this latest version of the Safe App Node.js package. Number three, we have been working hard at specifying the scope of an FFI version of the API in the Parsec crate. We have defined the parameters of what we want the API to look like in our beginning, implementation soon. We plan to have support for C, C++, Java, and C# language bindings for the Parsec API. So that means if you're coding in those languages, you'll be able to access Parsec's controls, basically, or its features, I suppose. Number four, the routing team is very happy to welcome John Hogblood. I could be pronouncing his name wrong. Apologies to John if I am. But John has joined the routing team. He has a PhD in mathematics and experience with C++. He will be joining the team as one more remote worker from Sweden. Feel free to read his introduction blog post on Medium and to clap and share. As always, welcome to the team, John. Number five, planning for Parsec's second milestone has been at the forefront of the efforts this week. We've had several team meetings where we discussed various approaches to handling dynamic membership and malicious behavior. This has allowed us to start getting some more meat on the bones of our high-level to-do list before we can finally get to the real low-level tasks spec'd out and entered into Jira. The current discussions are largely focused around resolving some of the natural tension that exists between routing and Parsec in terms of keeping an appropriate degree of separation between these two libraries. And lastly, number six, the majority of this week was spent on Crust and Safe Crypto integration into routing. We hit some bumps here and there, but finally got the build and test passing. Next step is to integrate this updated routing version into Vaults and run our end-to-end test on an internal test network. So I'm just going to read the top marketing bit here, which is kind of interesting. Actually, I'm going to go through the article they post here, but actually I'll just do that instead because that will be more detailed. All right. So they have a Medium post this week called Decentralized Exchanges. The link will be in the show notes. I'm just going to read through it here real quick. For those of you who have been following the MaidSafe story, you will know that the last 18 months to 2 years have been incredibly busy as we build out the platform. We have been working hard to develop key functionality, such as our new consensus mechanism, Parsec, protocol for asynchronous, reliable, secure, and efficient consensus. While there are further significant technology developments imminent, we are also fully aware that there are a number of Safe Network community members and crypto traders who want to understand the long-term strategy for our cryptocurrency. SafeCoin remains a key element of the overall strategy for the Safe Network. And then looks like they've got a link there. Oh, yes. Check out the short video to find out more. We've played that video before on the Safe Crypto show, but the link is in the Medium article. But we are also aware of the need to maintain the liquidity of our existing Omni asset. That's the MaidSafe token. The acronym there is MAID, MAID. Currently, MAID is listed on the Hong Kong-based HitBTC, the US-based Poloniex, and the New Zealand-based Cryptopia. We continue to examine opportunities to list MAID on other centralized exchanges to provide hodlers, with as many options as possible. But like many in this space, we have become increasingly concerned about the control that centralized exchanges can exert over their users and their vulnerability to cyber attacks. Cybersecurity company CipherTrace has reported that around 750 million has been stolen in 2018 alone. Furthermore, we are very aware that using such exchanges is not in line with our overall mission to remove intermediaries from the management of our data, be that files or financial transactions. Therefore, it probably comes as no surprise if we tell you we are now examining opportunities to work with decentralized exchanges. We believe the ethos of these platforms embodies what is driving us to create the Safe Network. Our mission is to build a trustless and truly decentralized system for data and communications that removes all intermediaries from the management of our data. How financial transactions operate within the Safe Network should clearly fit with this vision, because we regard financial transactions as a form of private speech that should be protected from surveillance by banks, governments, and other institutions. Yeah. This does not mean we are moving away from using centralized exchanges, because many users are happy with the convenience and support that these platforms offer. They're also a gateway for more inexperienced users looking for supported and easier-to-use tools. However, the weakness of the centralized system, especially having your data controlled by a third party, is a concern for MaidSafe, because we believe users should have ultimate control of their information. Decentralized exchanges have been around for some time, and the options continue to grow in terms of available solutions. We have chosen to provide some liquidity via openledger.io initially, and will examine other options in due course. In general, decentralized exchanges ensure users look after their own private keys, putting them firmly in control of their wallets, accounts, and all their trades. These exchanges enable anonymous and secure peer-to-peer trading, where the exchange is a protocol, not an institution, where users must trust only in the open source code, not in the behavior and actions of a company or their employees. OpenLedger.io ticks a lot of the boxes, as it does not require registration or approval from a central authority and is both private and secure, so only users involved directly in a trade exchange personally identify. So only users involved directly in a trade exchange personally identifiable information. At this stage, we do not expect significant volumes to be traded, but we are encouraged by the growing number of enthusiasts and crypto traders who are looking at decentralized exchanges. Yes, there are aspects which need to be addressed, such as lack of liquidity and general user friendliness. However, the speed with which cryptocurrencies have gone from niche to mainstream players suggests decentralized exchanges could fast become a credible alternative for users. As more users explore these platforms and more investment is made in the technology, it will also help to raise their profile, educate potential users of their benefits, which in turn will help to increase the liquidity of these exchanges. While we proceed with caution today, we do believe such decentralized exchanges will have a significant role to play in the future of decentralized networks, such as the Safe Network. If we are to overcome the security vulnerabilities of centralized exchanges and fulfill the promise to users of greater privacy and freedom, then surely decentralized exchanges must be a consideration for the future. I think that's a really nice statement they've made there in this article, and it's really awesome. I'm very pleased that they're now making their token available on a decentralized exchange. It's openledger.io. So it's really awesome to me. I'm probably going to get in there and have to buy some more MAID on that. All right, that's the end of our second topic. Our third topic is our news segment. So we have 5 articles today. The first is kind of just a rehash of what we talked about last week with the MasterCard patents, but this article is blockchain about to become a patent war battleground. This is out of Cointelegraph. Last week, news of at least 3 major players applying for blockchain-related patents emerged. Bank of America sought to legally protect its blockchain-based system, allowing the external validation of data. Barclays filed 2 patent applications relating to the transfer of digital currency and blockchain data storage, while MasterCard's application mentioned a form of public blockchain-based form of a public blockchain-based method for linking assets between blockchains and fiat accounts. As blockchain technology continues to be one of the most discussed things in 2018 and a subject for mass adoption, the number of crypto-related patents is steadily growing, and with patent trolls joining the game, a legal war over blockchain might occur in the future. Why do institutions need blockchain patents? A blockchain patent, like any other patent, is a set of exclusive rights issued by an official authority, a sovereign state or intergovernmental organization, that an inventor or assignee gets in exchange for revealing their invention to the public. For instance, in the U.S., patents are granted by the U.S. Patent and Trademark Office. Although there are no international patents per se, according to the Patent Cooperation Treaty, signed by 152 countries, by filing one international patent application under the PCT, applicants can simultaneously get protection for their inventions in many countries. As Bloomberg explains, business-wise blockchain patents, quote, are an essential ingredient for companies looking to reshape the financial services industry or spawn profitable cryptocurrency-related businesses, end quote. Essentially, patents help companies attract investment, protect property rights, and collect monopoly profits from other companies using their inventions. Or to block them from using their inventions. There's a little bit they left out.
Yes.
The first mentions of blockchain and cryptocurrency-related patents appeared around 2012, according to the USPTO database. That's the U.S. Patent and Trade Office. During the 2012 Trademarks Office. During the 2012-2015 period in the U.S. alone, institutions had amassed at least 83 patent applications that contain words like cryptocurrency and blockchain in their forms. Consequently, that number has escalated even further since, as Bitcoin became the market's favorite buzzword and ascended into the mainstream. In 2017, there were 97 blockchain patents filed in the U.S. as per the Financial Times report, I guess, which is more than all the previous years combined. Bloomberg law data suggests that the Patent Office has published about 700 blockchain-related patents it received between January 2011 and April 2018. It is worth noting that it takes about 18 months for the Patent Office to issue a patent based on the received application. 2018 might turn out to be even more fruitful in terms of blockchain patent applications, as blockchain has been widely branded as the most discussed technology of the moment. Indeed, according to Fortune's sources, the overall number of blockchain-related patents and applications for the next year, quote, is expected to be around 1,245. However, the U.S. isn't even the leader in that area. In 2017, China filed 225 of the blockchain patents, half of all the 406 blockchain-related patent applications made that year. According to the World Intellectual Property Organization database cited by FT, having severely outnumbered the rest of the world, after all, China made it a national priority. It's got a little graph chart here. Companies with the most patent filings: Bank of America, number one with 45. EITC Holdings, 42. Now, that company is, I think, I think he gets to it later in the article. Is that guy who claims he was Satoshi Nakamoto? he's I think, sits on the board of that company. CoinPlug, 39. Haven't heard of them. Alibaba, 36. They're a big business-to-business trading platform. IBM, 34. InChain Holdings, 33. Booby Technology, that's with a U, not two O's, 30. MasterCard International, 21. Hangzhou Fuzeme, I think it's one of the Chinese companies. Technology, 19. Hangzhou Yunfan Network Technology, 18. Patent trolls are hopping on the bandwagon. The majority of international blockchain patent applications are filed by EITC, also known as InChain. Bank of America, Alibaba, CoinPlug, and IBM also round out the top ones, according to data obtained from BitcoinPatentReport.com. Now, EITC, perhaps the least popular out of the five for a casual reader, is affiliated with Craig Wright, that's the guy, an imposter of Bitcoin creator Satoshi Nakamoto, and a rather controversial figure in the industry, to say the least. I think it was, what's the Ethereum guy's name, the founder of Ethereum? Oh, I'm never good with names. I can't believe I forgot
Buterin?
his name, though. Yeah, Vitalik Buterin. I think that he was at a meeting where Craig Wright was, and he actually just said in front of the whole group, "Why is this imposter here? Why is this fake guy here?" I mean, right to his face. So I mean, it's I don't know. I don't think I think he's Satoshi Nakamoto. I'm highly suspect about that. So it's been argued that Wright is gathering patents without the intent of actually using them, but instead to demand large payouts from companies who might entail similar technologies in their line of work. As Mark Kaufman, an attorney who co-chairs the Blockchain Intellectual Property Council at the U.S. Chamber of Digital Commerce, told Fortune, quote, "His tactics and activities have all the marks of being a patent assertion entity, or what's pejoratively known as a troll. I'm not aware of his company as having any products," end quote. So there you go. Craig Wright is a patent troll. Yes. Now, would Satoshi Nakamoto be a patent troll?
I don't think so.
I don't think so.
Me either.
So I think, it's pretty clear what kind of person he is. I've listened to him talk a couple of times in some lectures he's given, and man, this guy has some kind of ego. I mean, I think he's got really high dopamine levels. There's something really weird about him. He was going on in the one talk I saw last week. He was going on about how many degrees he had. I mean, seriously, people, that is not how normal, sane people, I think, are. They're usually kind of humble. I mean, if somebody asks them, if somebody asked me, if I had a degree, I would say, "Oh yeah, I've got a degree," and blah blah blah. Right? But it's not something I bring up to. And he was going on about like he has just more degrees than he even remembers. I mean, master's degrees and stuff. There's just something really weird about him. Anyway, I digress. So back to this article. Indeed, blockchain has become a brand new target for patent trolls. In December 2017, Eric Spangenberg, an entrepreneur despised in Silicon Valley for challenging tech patents and turning a $1 million tech patents portfolio he bought in the 1990s into $150 million, created a company called IPWE, comprised of 20 full-time employees and consultants. Its goal is to apply blockchain, artificial intelligence, and predictive analytics to improve patents. As Spangenberg put it in a comment for CNBC, he elaborated, quote, "It is a curious path how a collection of misfit trolls, geeks, and wonks ended up here, but we are going to crush it and make a fortune." End quote. James Bassan, an economist and executive director of the Technology and Policy Research Initiative at the Boston University School of Law, told CNBC that, quote, "Spangenberg has made out well," end quote. Then there's another quote. "You want to go into a new field like blockchain because there won't be a lot of patents and the original stuff was open source," end quote. Bassan argues that patent trolls proved to be a legit threat to the software industry during its first boom when numerous crap patents were issued for various digital payment methods. Trolls provoked lawsuits against numerous businesses who incorporated any form of e-commerce transaction, and the court would take the former's side. According to Bassan, quote, "Some trolls are bottom feeders and send out thousands of letters, can be tens of thousands of letters, for a few $1,000 each, and lots of people paid up in those cases." Somewhat similarly, Bank of America, another top patent applicant, seems to prioritize having a registered technology over actually using it. In 2016, Catherine Besant, Chief Operations and Technology Officer at Bank of America, told CNBC that having blockchain-related patents is, quote, "very important to reserve our spot even before we know what the commercial application might be," end quote. Notably, Bank of America doesn't appear to be positive about cryptocurrencies either. For instance, in May, the bank called Bitcoin troubling and uplifted its decision to ban customers from purchasing crypto. Bassan argues that, according to his own review of the USPTO search database, by the end of 2017, the office has granted 265 patents related to Bitcoin and 53 patents related to the blockchain, with the earliest blockchain patent being acquired in April 2015. Thus, getting a patent is a time-consuming process and an expensive process. As the Wall Street Journal writes, the Patent Office, quote, "publishes applications up to 18 months after they are filed and can take years to examine an application to decide whether to grant patent protection. Bloomberg cites a similar time frame and provides the example of Bank of America's application for a crypto exchange system to convert one virtual currency into another. It was submitted in 2014, published in 2015, and granted in 2017. However, blockchain patents are being granted, at least to some extent. For instance, Bank of America reportedly has at least 2 at this point. That's granted patents versus patent applications. The above graph we looked at was patent applications. Just to clarify that. Nevertheless, the outcome of a blockchain patent filing is often unclear. While there's little information on the exact amount of denied applications, it is worth noting that in 2014, the U.S. Supreme Court ruled that software apps dealing with abstract and non-inventive ideas can't be patented under existing law, mainly due to the patent troll-induced fiasco mentioned above. Since then, it has become considerably more complex for a software company to pass the eligibility test. So that's good. Additionally, the open source model that was once crucial to blockchain's philosophy and could prevent the potential patent war is reportedly becoming less prominent in the industry. A 2017 collaborative research of the open source blockchain efforts conducted by Deloitte and GitHub suggests that a majority of such experiments had failed. According to their report, while more than 26,000 open source blockchain projects were started on GitHub in 2016, merely 8% of those projects remained active in 2017. Another retreat for open source blockchain projects, R3 Consortium, has seen large players such as JP Morgan and Goldman Sachs drop out last year. Still, there are different examples. For instance, IBM uses the Hyperledger platform, an open source blockchain framework overseen by the Linux Foundation, for its many blockchain initiatives, from cross-border payments to stablecoins. So, yeah, it doesn't really mention so much the use of patents to just block. And I suppose trolling for a lot of people does block them in a silent way, but trolling often, they're seeking remuneration for either the abuse or the future use of the patent that's being held. But I guess, if you don't have the money, then you're effectively blocked. But in some cases, they just set the bar too high or don't even set a bar at all and just say, no, you can't use it. And it's frustrating. In some, I think with technologies coming about like EOS and Safe Network, we're going to see a lot of apps being developed on those platforms that even if they violate patents, there's nothing that can, unless there's a physical company behind it that can be attacked, then it's going to be really hard for them to go after that sort of thing with patents. One of the real problems I see is when it's related to companies that are really involved with doing things with the existing financial system and interfacing between blockchain and the cryptocurrency space in general with traditional financial networks, because in those spaces, they're exposed, and it seems like a lot of patents are kind of gathering in that space. So it's going to make it more difficult, more tricky to get in and out of the crypto space. I think what we really need more and more of is ways to pay directly with crypto, and hopefully we'll start seeing that down the track. I've rambled on enough about that article. Let's get on to the next one. Top 10 crypto deals in 2017 returned over 136,000% on average, report shows. Now, crypto deals, I think in this context, is basically they're meaning ICOs, so companies that they invest. A company invests so much into starting an ICO and then they get a return. I think that's what they're talking about here. Research into the top 10 crypto deals in 2017 based on their investment returns, ROI, return on investment, has revealed that on average each returned over 136,000%, according to data shared with Cointelegraph by Crypto Finance Conference analysts on July 27th. Out of all the crypto projects that raised a minimum of $1 million in 2017, IOTA clinched a staggering 614,934% return for investors. I guess that's investors in. I'm not really sure what they mean. If they're talking pre-sale investors, which is
it's probably
founders of the company.
Yeah, I would think that's what they're referring to. It'd be kind of crazy.
I would think that's what they mean. Yeah.
Yeah.
Sealing the top spot in the researchers' rankings, IOTA is the Internet of Things-focused crypto platform that uses a so-called Tangle system. Protocol is different from blockchain and it does not use blocks or mining, but rather is built up on directed acyclic graph. Okay, blah, blah, blah. I don't see how that's related to the article. CFC notes that the project is expected to reach 75 billion connected devices by 2025. In second place is NXT, Next. I was surprised by this myself, but I used to be a hodler of Next. Next is a blockchain-powered decentralized ecosystem that focuses on crowdfunding, governance, cloud services, and digital asset exchange. Investors in the project's native NXT token saw returns of over 500,000%. Open source blockchain platform Ethereum, co-founded by Vitalik Buterin, who has characterized the project's ambition as nothing short of becoming, quote, a world computer, ranks third after bringing over 141,000% return to its investors. Andreas Franco Storr, co-founder and CEO of the CFC, said of the research findings, no project in the top 10 had a ROI, return of investment, that was less than 6,000%. Gains that are unfathomable for investors in many other markets. These numbers demonstrate the strong upside and myriad real-world applications for cryptocurrency. Also, the extreme success of infrastructure projects suggests investors should be seeking foundational companies that will redefine the internet in the next 10 to 15 years. Safe network, people. Safe network. Please look into it. Okay. Yep, and there's a graph here looking at the top crypto deals of 2017. IOTA, Next, Ethereum, Stratus, SpectreCoin, Neo, Arc, StorageCoin X, Lisk, and Komodo in that order. All with huge gains. Earlier this week, Reddit co-founder Alexis Ohanian, whose VC firm Initialized Capital was one of Coinbase's first investors, gave his own perspective on crypto investments. Ohanian said his bets are on, quote, the picks and shovels, end quote, of the nascent space. In other words, those projects that are building the robust but admittedly unsexy infrastructure that will cement the industry's foundations. Indeed, I agree wholeheartedly, which is why I'm so interested in Ethereum, EOS, and Safe Network, and really any others that are in that space trying to build infrastructure. I think they are ultimately the big ones to be invested in. Okay, our next article. Exchanges Roundup. CME volume doubles in Q2. Lawyer predicts SEC delays ETF until March. Well, that already happened. So, see, in recent news pertaining to cryptocurrency exchanges, the Chicago Mercantile Exchange, the CME group, has revealed that trading volume on its Bitcoin futures markets nearly doubled during Q2. Lawyer Jake Stravinsky has predicted the United States Securities and Exchange Commission may postpone its determination regarding VanEck's proposed Bitcoin exchange-traded fund until March 2019, and BitMEX has set a record for the number of XBT contracts traded on its platform in a single day, with over a million XBT contracts exchanges hands in reverse. I'm not really sure that's... Anyway, so I guess this is like 3 articles in one. I just wanted to go over this first one here. CME reveals 93% growth in daily volume during Q2. The Chicago Mercantile Exchange has announced that trading volume for its Bitcoin futures contracts nearly doubled quarter over quarter. During Q1 2018, the average daily trading volume for CME Bitcoin futures was 1,854, equivalent to 9,270 Bitcoin, whereas the average daily volume for Q2 was 3,577, equivalent to 17,885 Bitcoin. So on Twitter, CME Group posted that, quote, Bitcoin futures average daily volume Q2 grew 93% over the previous quarter, while open interest surpassed 2,400 contracts, a 58% increase. So we've seen a lot of movement in Bitcoin the last week, and it's probably not unrelated to this, but very interesting to see what's going on there. I guess, what was it, back in December that CME launched their Bitcoin futures contracts? And
I think it was around then, yeah.
Yeah, so it's seeing some increase now. It's provocative. I don't know. I'm kind of wondering what's that going to mean for the future. Is it, yeah, but we'll see what happens. So our next article, blockchain-based betting platform Augur. Now, that's a decentralized betting platform. I believe that it has an app. Well, Augur has a website. It has an app as well, so it's pretty much can't be taken down at this point. So their platform, Augur's platform now features assassination markets. I think you can go in, you can create your own markets. Augur didn't create this market, this assassination market, but it's now popped up. As so-called assassination markets have now popped up on blockchain event betting platform Augur. Mashable media outlet reported on July 24th, users are now betting on whether certain public figures will die. Created by the nonprofit Forecast Foundation, Augur launched its Ethereum mainnet-powered predictions platform on July 9th, according to Fortune. On the platform, users can make a prediction about the outcome of any event. If a user believes the outcome will happen, they buy shares with Ethereum. If a user believes the event will not occur, they can short the bet by selling shares. In either case, should a user's prediction come true, they can profit from the result. Users have recently posted bets on Augur regarding the deaths of a number of public figures such as U.S. President Donald Trump and CEO at Berkshire Hathaway Warren Buffett. The bet, quote, will Donald Trump, President of the USA, be killed at any point during 2018, has acquired 50.3 shares as of July 23rd. Amazing. This is not the first example of an assassination market. Back in 2013, an online market was created where users set out to fund the assassinations of Ben Bernanke and American President Barack Obama, while the current markets on Augur merely place a bet on whether such an event will happen. Should the wager be high enough, it could still create an incentive for someone to carry out the crime.
Jeez.
Users on the Augur subreddit have suggested that something be done about assassination markets, but given the decentralized nature of the platform, no one person can single-handedly change Augur or shut it down, according to the Augur website. To ensure that a bet is settled properly, Augur has created a system of reporters who state the truthful outcome of a positive event. Reporters are essentially holders of Augur's own REP token. In order to report an event, users must stake REP on an event's correct outcome to receive any of the settlement fees. If REP holders incorrectly report a result, they lose their tokens. If they do not participate in a fork or a highly disputed outcome to an event, they lose 5% of their REP. Passive holders of REP who do not participate in the bet settlement process are also penalized. REP is currently trading at $30.16 press time, having hit its peak of over 107 in January 2018. So, yeah, I don't think Augur is a fully anonymous kind of network. So be careful if you're using this for doing anything illegal. You might still be trackable back to your IP address somehow if they ever work out how to do that. I'm sure it's complicated, but, you know, given that this kind of thing is going to start manifesting and it's pretty much, you know, not blockable, they can't really stop it. So, well, I guess we'll probably see law enforcement getting into this, trying to track down who's involved in these markets, as opposed to trying to stop these markets, because they can't do the latter, but they might be able to do the former. Anyway, it's very interesting what's going on, and I think we're going to see more and more of this kind of thing in the future. So hang on to your pants, folks. Our last bit of news, in case you were on that assassination list, you might want to become a citizen of a new country and disappear. You can now become a citizen of Antigua and Barbuda for less than 13 bitcoins. The Parliament of Antigua and Barbuda has amended the country's Citizenship by Investment Program Act to accept payments in the form of Bitcoin and other cryptocurrencies. With Antigua and Barbuda's citizenship by way of investment into its National Development Fund having been reduced to a cost of only $100,000 last year, the price for citizenship in the independent Commonwealth country is less than 13 bitcoins at current prices. Antigua and Barbuda's parliament has amended the country's citizenship program to allow payments in the form of cryptocurrencies. The resolution was passed in the country's lower house and also facilitates CIP payments in the form of fiat currencies other than US dollars. Gaston Brown, Antigua and Barbuda's Prime Minister and Minister of Finance, stated, quote, so not only are we providing the capacity for payments in euros, but we are also approving for payments using Bitcoin and other cryptocurrencies. Mr. Brown acknowledged that, quote, we know we have to be careful with regards to cryptocurrencies. The Prime Minister added that, quote, moving money is important, and if you cannot move money, you cannot receive it, concluding that, quote, it is quintessential that we have a payment mechanism that could facilitate payments in cryptocurrencies. So Mr. Brown emphasized that facilitating CIP payments in the form of cryptocurrency, quote, expands your market because we have a number of cryptocurrency investors who may be quite willing to take up our citizenship but would only pay in cryptocurrencies, end quote. Adding, quote, if you do not accept the cryptocurrency, then you would be literally locked out of the market, end quote. In October of last year, the country's parliament reduced the price for citizenship through its National Development Fund by half, bringing the price down to $100,000. At the time, Antigua and Barbuda government argued that its citizenship by investment program was failing to compete with those offered by neighboring countries. Mr. Brown asserting that in the 2 months leading up to the amendment, only 600,000 had been generated from 3 new citizens, whereas neighboring Dominica was earning $50 million per month through its 100,000 NDF program. Wow, a lot of passports for Dominica. Despite the enthusiasm surrounding the acceptance of cryptocurrencies on the part of Antigua and Barbuda's ministers, Mr. Brown indicated that the government will convert all virtual currencies earned through the CIP into fiat currencies on a daily basis in order to ensure we don't have any exposure to cryptocurrencies. Yeah, so that's great. I'm loving that. And down the track, I might love me a passport from Antigua and Barbuda. just for the heck of it. Look at those. It's a nice little picture there, the bay and the boats. Might park my yacht down there someday once I'm crypto millionaire. All right. I don't know. Have any thoughts, Mike? Last thoughts?
Well, the prices for things seem to be very cheap on the Bitcoins. So if you ended up having 1,000 of them way back in the day, you could get cool stuff now.
Yep, indeed.
You could
prices are looking good.
I saw a penthouse condo in Miami that was on sale for 33 Bitcoins, and now you could get a citizenship in a different country for 13 Bitcoins. Man, you could do a lot with 100 Bitcoins.
Indeed. It's a nice thing. I'm very excited by where things are going.
I'm just wondering, well, how much is a Tesla in Bitcoins?
If
I wanted to get my Tesla car, how many Bitcoins would that cost me?
I'm not sure if Tesla's selling them in Bitcoins yet, but probably there might be one on the used market for sale in Bitcoin.
I'm probably thinking you'd be able to do that. I'm sure someone would say, yep, that works for me.
I know there are yacht companies that make yachts, manufacture them, that are selling in Bitcoin now. So, there are new possibilities cropping up all the time.
Yeah, it'd be kind of interesting to see what kind of options there are for persons who are hodling for duration. And it's like, yeah, I can go and loan you some. This is my interest rate.
Yeah.
And just loan them the cryptos they're looking for and build it into the exchange like a lot of exchanges have done. And, they can go and lend for a certain number of days at exorbitant interest rates by people who, paid by people who want to go and, have X amount of coins for X amount of days. And, well, we hope they're right.
It's kind of a futures contract, isn't it? It's kind of a way to buy in. Yep. Well, it's very interesting. All new things happening. But that's all we have for today, folks. So I'd like to thank our viewers for joining us today. I hope you found the episode informative and helpful. Please subscribe, like, comment, and share our video with others. And tune in next week for another interesting episode.
Have a good one, everyone.
Bye.